All right. So the thing I probably get the most questions about, whether it's in chat or
USA Modular Drew speaking.
all right, well, the thing I get the most questions about, whether it's in chat or DMs or whatever other course of the day, are SMTs. Now, I think everybody pretty much knows an SMT is a divergence between two correlated assets. The two that I use are NQ and ES, and that's because they are very heavily correlated, algorithmically correlated, just in an effort to try to make everything make sense. But what you'll find is a lot of times at key levels, if there's going to be a reversal or at least a pullback, you'll see a divergence between the two. And so there was a divergence this morning at open. There were actually two. One was ES. It's really hard to see on this, but we'll kind of go into a different example later. But one was ES took the London highs and NQ wasn't anywhere near it. And so NQ went down to manipulate, which actually gave us our SMT for the day because it went to this 15-minute fair value gap. I'm going to go into a lot more detail, guys. This is just a beginning summary. Manipulated down to this 15-minute fair value gap, and then we really didn't look back after that. So SMT is a very simple concept that can confuse a lot of people if you don't have the right rules in place. So to really take advantage of divergence and SMTs, you have to understand liquidity in the charts, what liquidity looks like, where liquidity rests, what that looks like in terms of trying to take advantage of it. And so to make this a little easier, let me just put these two next to each other like that. Okay, so you have two different kinds of liquidity, right? You've got external liquidity, which would be old highs and old lows. So this would be our buy side liquidity up here, and our sell side liquidity would be down here. That's our external liquidity, okay? Buy side, sell side. To go with that, you have internal liquidity, which is fair value gaps, order blocks, that kind of thing. Okay, so there's a fair value gap here on the 15-minute, and there's an order block right here on the 15-minute. So this would serve as our internal liquidity, okay? Let me get this. This chart is crazy today. Sorry, my dogs are making a bunch of noise. All right, so now we've outlined our liquidity, right? We've got buy side, we have sell side. Let's chart it on ES here. A lot of times it's going to be session liquidity. We actually have a small SMT right here. But ES took that high and on this candle, and NQ didn't. And so that likely means we would retrace down into the 15-minute fair value gap. So you could take a short down into that if you wanted to, or you could just wait to get down there. Sell side on ES would be down here. All right. And we have the same internal liquidity. So we've got 15-minute fair value gap and a 15-minute order block. Okay. All right. So now what you're going to find, and what a lot of people get confused by, is they think just because, one 15-minute candle took a low that another one, the previous 15-minute candle low, if it didn't go into a point of interest, I'm not going to stress about it. I'm not going to sweat. One form of hidden liquidity that you guys always need to be aware of, that, we talk about internal liquidity all the time with fair value gaps, but a source of internal liquidity that a lot of times people don't think about is just the bottom of this wick right here. Yeah, it's the start of a fair value gap on a 15-minute chart, but it's going to be a draw on liquidity. If you take a high and then you start to see a reversal back down, where's your nearest draw? It's going to be this wick right here. It's not going to be the halfway point, even though price could go into the halfway point. Price might go past the halfway point, but the draw is going to be right here. And then if you're bullish, you're going to expect price to continue up. Now, if I'm really bullish and I want to see price reverse, then I would expect to see an SMT at this level in this fair value gap right here. So price would come down, probably NQ would take this level and ES would not. Or if they both take it, then what I'm going to do is I'm going to go down to the 1 minute chart, and I'm going to look for an SMT on the 1 minute. So I'm going to look for one of them to make a low, the other one didn't make, coming out of that fair value gap, and then see a big push up. This is the same. We go through this. We've done this 100 million times in the mornings. I go through the same process every morning. I look for either internal or external liquidity to be swept on one or the other, and take that as my SMT, and then look for the nearest draw from that point on. So if it takes an external level to start with, a lot of times I'm going to look for an internal level. So in this case, we were super bullish this morning. And this morning is a key example of where people get confused a lot of times, because we had this like opposite thing going on. ES was taking highs, NQ pushed down. But if you look at where NQ pushed down into, it was into this 15-minute fair value gap right here. And if you were trying to go short and hang on to that, and you didn't put your stop at break even, or you didn't take profits, or you set a take profit all the way down here at low a day or whatever, you got smoked, right? Well, why is that? We were very bullish, and this is where you have to understand the narrative of price. And that's why people get fooled by SMTs, is they don't take narrative into account a lot of times. They don't understand the difference between a reversal and a pullback, and so they think that, okay, yeah, we're just going to die here. Well, we've pretty much been dying all week. But huge push up overnight. We had a 15-minute change in the state of delivery, a 15-minute market structure shift. Wasn't very likely that we were going to go down and take out the low right out of the gate this morning. It was likelier that we were going to retest an area of internal liquidity because we had taken external highs, right? We took these highs, we took these highs, we took these highs. So we were probably going to go down to some internal liquidity at open, which we did, which was our SMT, because ES didn't even come anywhere near this morning. So you could put like that low to there, and then you would see, okay, where's that candle on ES? Right here. I mean, it never, like the opening candle is up here. So that's the trade you'd want to use to take advantage of. Now, if you want to scalp and you want to try to catch every little blip and burp and whatever on the charts and focus on the 1 minute, you can catch plenty of 1 minute SMTs, but you're going to get faked out by a bunch of them, because you need to watch the 15-minute chart to really get the true advantage of what you're looking at, because you still have to play the higher time frame narrative. So in this case, we talked, when I first started, we had a little SMT here. We got this one, and NQ didn't do that. So it's down here. So we're probably going for internal liquidity, which would be the red line. That would be what I'd be targeting for if I was in shorts. So let's go ahead and see if we can find a spot for shorts here in the 1 minute. All right, so again, SMTs are just part of the formula. They're not the whole formula. Okay, so we had this break structure. Now we're pulling back down. Let's try shorts here and just to see what happens. See if it continues down. We're very late into this one. Ideally, what you'd want to do is get in and put your stop above the SMT. What would that give us? Like a 1-to-1. All right. So you put your stop above that, and now we're going to sit and wait and see if our price hits or not. But what it boils down to is you're going to look at, when you see this SMT, all right, we've got ES took a high, NQ didn't take it. Well, where would I get in here on the 1 minute chart? Let's just get this. All right, get that off there. All right, so we know we have our SMT up here at the high. I don't have a change in the state of delivery yet. I don't have a market structure shift yet. I don't have anything that tells me the lower time frame narrative has changed yet. So then we get to push back up. Now we come back down. Still no indication that price has decided to reverse yet. So on the 15-minute, yeah, it looks like, okay, we might reverse here. Just because you see an SMT or a potential SMT doesn't mean that price is actually going to reverse. You have to wait for confirmation. So we do get a change in the state of delivery on the 1 minute chart right here, finally. And so you could have taken a short at this point on this candle, put your stop above this candle, sit and wait. You gotta be patient. And it's going to get really close. You're probably going to have your butt pucker and sweat a little bit. Then it comes back down. What I personally like to wait for, I don't usually just get in just when I see a change in the state of delivery, unless it's very aggressive. In this case, obviously, it wasn't very aggressive. There wasn't even a fair value gap there. This would have been the area that I would have been looking for, because we get a market structure shift because we have a high, then we get this swing low right here. We close below it. We've got a couple of fair value gaps, and we have an order block. Okay, so to me, this is the much better entry for short. So on this market structure shift, you go short, and then you get the move. If you just see an SMT or a potential SMT, and you're like, okay, well, ES took a high, NQ didn't take it yet, I'm going to go ahead and go short. Well, that doesn't mean that NQ is not just late to the party. And that's what you want to protect against. You don't want to just have where one index is kind of just slowly dragging behind the other and get caught. That's what fakes out. You have to wait for a lower time frame confirmation. So you have your higher time frame narrative, and then you get your lower time frame confirmation. Now, you could have taken the short here when you get this fair value gap. Your stop would have been up here, and you'd have been okay. You might have sweated a little bit when price retraced up into this area, but you'd have been fine. You would have had your stop above the SMT high. You had confirmation that you had a change in state of delivery. You also get a market structure shift because now you get a close below this low, and you have a fair value gap. Okay, so you could have taken it here. Trade would have been fine. Your stop's up here. Yeah, you sweat a little bit. You come back down. All is well and good. But at the end of the day, just because you see uneven tops or uneven bottoms on a chart doesn't mean that that's where you need to get in. You have to be patient and you have to wait. Now, there are going to be times where you'll see it, and as you spend more time getting used to price movement and price action and how things progress along through the charts, where you're going to be able to take earlier entries. But until you have that kind of time on the charts and that experience at profitability, you're going to want to take your time and make sure that you get the lower time frame confirmation. Because what will happen if you don't have that lower time frame confirmation and you don't have the setup and the system that you can trust, you're going to get into a situation like this where you're playing a pattern. You're not playing the narrative. You're just playing a pattern, and you're like, oh no, this fair value gap got inversed right here. So that probably means price is going up. Well, it inversed out of nothing. There's nothing here. There's no higher time frame narrative that says it should continue to push up. So you're going to get shaken out when it gets close to your stop loss. You're going to be like, well, I'll cut my loss here because I don't want to take a bigger loss. Look, man, when you get in the trade, your stop loss is your stop loss. If you think price is going to go a certain direction, then you stick with it until it doesn't. And then if it doesn't, you evaluate what you could have changed or what you could have done better. In this case, we had the SMT, we got the market structure shift, we had a fair value gap, we had a change in the state of delivery. Everything was there. It was kind of spread out, but it was right there. Or if you waited and you were patient and you got in on this one, you had everything you needed all really close together. So you get a market structure shift, you get a breaker block, you get an order block, you get a fair value gap, you go back up, you retest the area. So you could have gotten in on this market structure shift right here. You could have gotten in on this retest right here and all of that. But just trying to trade an SMT by itself is a mistake, and I would never recommend that you do that. I know that there are people that say you can, but it's a confirmation. It's like any other indicator or anything else. It is extra confirmation. For me, it's the extra confirmation that I like to have in my trades. So I frequently, if I don't have an SMT, I won't take the trade, just because that gives me, I can hold through some serious chop and some potentially serious drawdown if I know that I have an SMT and I got everything else that I was looking for in order to determine that we were going to reverse price. I could have held through this inverse fair value gap because I would have seen, okay, yep, we got changes to delivery, we got market structure shift here, we do have an SMT at the top, and that SMT would have given me the courage to kind of hold through this. Now, if I would have just seen, okay, if you're gonna try to trade patterns with smart money concepts or ICT concepts, that is what is going to mess you up. Because especially if you're like, okay, inverse fair value gaps are the way. All right, well, inverse fair value gap, and you got smoked. I mean, you didn't get to this high. You got to this high, but what'd you make? Like $10. And then price came back down. So the higher time frame narrative, SMT was a part of it, is not the only thing. You take it, you get this 15-minute high, ES took it, NQ didn't. We got everything else in place, and now we take the trade and we go. That's the same thing that I look for every day now. The other thing about SMTs that is extremely important, and it's as with all ICT concepts, it's time and then price. So did it happen at a key time or a key level? The key time that you're going to see most, the biggest SMTs of the day frequently is going to be between 9:30 and 9:45 Eastern. Maybe sometimes as late as 10 a.m. Eastern. But sometime around market open, 9:30 to 10 o'clock, that's going to be the one that I'm looking for. You're going to see a liquidity sweep one way or the other, and then it's going to run. Now, occasionally you will find if there was high impact news at 8:30 a.m., then what you'll see is, hang on, somebody's. All right, so if there's high impact news at 8:30, then you'll see an SMT at that 8:30 news, and then when the market opens, we'll just get straight continuation. So that's something else you should look for. Check the calendar before you get started for the day. Was there high impact news at 8:30? Thursdays, every Thursday, there's high impact news at 8:30 a.m. And that's unemployment, right? So you're gonna want to take a look at that. Was there an SMT on the unemployment, and or CPI or PPI or whatever acronym of news that comes out? It's high impact at 8:30. Take a look at that. Where was the SMT? All right. Now, frequently you'll get another liquidity sweep at 9:30, but sometimes you don't. And that's why I watch the 15 and the 1 minute, because sometimes those liquidity sweeps at 9:30 are kind of subtle. They're not very big. But you're still going to want to keep an eye on it. So for those of you that have asked me about SMTs, it's very important that you understand they're just a part of the picture. They're a part of the strategy. They're not the whole strategy. They're just a part of it. When you see one, then that's basically when you should be like, ooh, or when you see a potential SMT, that's when your antenna should go up and you're like, okay, I need to pay attention here because maybe something's about to happen. And then when you get the opportunity and take it, you take it. Otherwise, you just sit and wait. And that's what I do. So once I start to see a potential SMT, all right, now I'm paying attention. If I don't see one, I don't care what price is doing. I really don't. Like, it can do whatever it wants to do. It can do its continuation. It can even reverse without an SMT. That's fine. I don't care. For me, I know that my win rate has gone up substantially and my bank account has improved substantially since I started to use SMTs as an additional confluence. You don't have to do that. You don't have to use them at all ever if you don't want to. You can only look at just the one chart if you want to and not have both of them up. That's totally fine. I wouldn't recommend it, but you can. And you can be a profitable trader, but that's not my style. All right. Any questions? I know that was through a lot of, and there are a lot of concepts in this overall strategy, but you guys are going to have to spend some time studying some of that, and I'm happy to point them out.
Yeah, I got a question, man.
What's up?
So my whole thing is, you mentioned the key levels, like, because today we're obviously bullish, so taking the bearish SMT is kind of what scared me because
Mm.
you're going against the trend. It's like,
Mhm.
How do you gauge that?
Well, okay, so that is just understanding how price works, right? So we know that price moves external to internal and internal to external. Now, when you see it and you don't if you don't want to take it, then that's where you can be patient. You're like, okay, I see the SMT. I don't want to get in on this. I don't really like it. Okay, yeah, that looks like it might go down. Okay, where's my nearest draw on liquidity? If you wait for this candle, right? So we took external, so our draw on liquidity would be internal, which would be this low right here because that's where the 15-minute fair value gap is. Okay, so that's my draw on liquidity. Where's my stop? Okay, my stop's going to have to be up here. All right, let's get a retest of this fair value gap, which you get here. So if you got in on this candle and your stop's here, you reduced your risk pretty substantially. And then you just wait. You know it's not going to be a 100% play, but even if it's a 70 or 80% play, you're going to be in good shape. So there's no 100% play in the market. I would say that whenever I wait for an SMT and I'm patient and I wait for all of these things, my win rate is really high. I haven't actually looked at my journal to see exactly what it is with only that setup, but I know it's a lot higher than when I don't wait for it. So sometimes I get impatient. I'm like, I got to get in, and then I freak myself out or fake myself out or whatever. But if you look at it, and even you know that okay, we take an external. Where would we go? Well, we would take internal, which would be down here, and you can just sit and wait until you have the confidence to get in the trade. So, we get in this, we go through this chop. Even if you wait to get in down here, all right, we got this inverse fair value gap, a whole balanced price range. Maybe you get in over here, and then you get this dip down, and now you're in good shape. So, it's just really about understanding how price moves and where price wants to go, and external versus internal. That'll kind of help you out. Hey, good. I'm glad it helped you, Jay Baller. So, Matthew, to open a practice account, you have to go to add-ons you click on accounts, and then you go to add-ons, and you add it there. Yeah, no problem. So I hope that explanation made sense. But yeah, there's going to be a lot of times where you'll see one, and you don't just because you see a potential SMT, it doesn't even mean it is one. Like I said, the other asset could just be kind of dragging butt and be behind the game. So just have patience, wait for a lower time frame confirmation, then get in.
Hey Jimmy, I have a question.
Mm-hmm.
So about you said draw of liquidity, right? So you do the red line there because that would be your first draw.
Mm-hmm.
So naturally, if there was no wick there, like like without that wick, what I'm trying to ask is how would you basically what I don't understand is how do you figure out where liquidity is? Like that's what's confusing to me. I till this day I don't understand. How do you know like okay today the bias is downside and there's liquidity sitting in this area. Like, how can you identify that?
So on a daily, let me clear this stuff off. On the daily, it's going to be a little bit different. So for the daily, you're going to want to study daily profiles. And so what I do is I do this. And I looked at the chart this morning, and I thought, okay, I start with the daily chart. Let's see, what are our potential areas of interest on the day? Get my little lines out here. Okay, there's yesterday's low. We swept that during Asia, or sometime we swept it overnight. So if we swept that overnight and we're pushing back up, well, our nearest one is going to be yesterday's high, which is right here. And so we took that. And then it's going to be a matter of, okay, where are our additional draws after that? Okay, well, I've got a daily fair value gap that starts right here. So that'd be a draw. And then I've got a daily order block or breaker block, that's right here. That could be a potential draw. And because on daily, we went external, now we're going to go internal, right? So we took this low, we went external, now we're going to go internal. And that's how I determine my daily bias. Everybody's a little bit different, but that's what I look for. And then I look for a lower time frame confirmation based on that. So for me, it's going to be like the 15 down to the 1. And then
So today, after we've taken yesterday's and the previous day's high, then we'd be looking for what is it, Tuesday's high. That will be the next
No.
draw then, or
Nope.
we're rejecting the order block.
The breaker block right here. Yep. So you'd mark the bottom of the daily breaker block.
Yeah.
Yep, right there. So, and then you could put, maybe we're gonna fill the daily fair value gap and bounce from there, or then we'll take the next day's high. So that's how you kind of identify where your levels might be.
Got it. Thank you.
Yep, that's right, Macho Mandolf. See you, Matthew. So yeah, when you see, all right, we hit the daily breaker block, and then we formed a 15-minute SMT, and now we have 1 minute break structure, market structure shift, whatever you want to call it. Does that makes you feel a lot more confident, right? So you don't ever, personally, I don't want to just take an SMT for the sake of taking one. Yeah, always try to, the higher time frame narrative, guys. Higher time frame narrative is very important. So try to understand it. If you don't understand liquidity, then you're going to have a hard time with everything else. And external to internal, internal to external. When you see price go external to external, then your longer term bias is going to change. Okay. So when you see if we go external and then we go up and take these highs, okay, man, I'm just solely looking for buy side. And so I'm looking for price to go up, come back down for internal, go back up, come back down for internal, go back up. In this case, we're still technically bullish on the daily because we got the daily order block here. We didn't get a daily market structure shift, so you could see price push up. And so you're going to look for some of these levels to get taken, and then you're going to be patient. You're going to wait to see what the lower time frame does at each of these levels. Does it accelerate through, or does it start to give you some indications of reversal? And when you see an SMT at one of those levels, then that's when you know, okay, well, even if we are going to continue, we're probably going to go down and at least get this internal liquidity to continue up. So we go up, we hit this area. This was our breaker block, daily breaker block right here. We had SMT at the high right here. We get our market structure shift, fair value gap, blah, 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 and down we go. Any other questions? Well, Jay Buller, I sit in front of these charts. I am not joking all day, every day, and a lot of nights all night. I don't trade at night, but I do watch. And it's just about being patient, man. Just about being patient. I would say that it's not Macho Mandolf. It's just been retested. And just barely at that. Now, I don't know what ES looks like. On ES, it may be. We can pull up ES. ES might look totally different on the daily. I charted it out this morning, but I don't remember. Yeah. ES is bullish as all get out right now. So
ES already took the highs on the daily, right?
ES almost took all-time highs. So we have a pretty significant, and that's something to think about too. We had a pretty significant SMT on the daily chart. Pop that up here. I'll put M&Q up since that's what I'm trading. All right, so ES on daily. Very different, obviously. ES or NQ's all the way down here. ES is up here. So, we could see a continuation where price just pushes up. We take all-time highs on ES and it just keeps on going. Or ES takes us high. NQ's like, nope, we got daily breaker block there. We're going to continue to fizzle out and push down. Again, that's why we trade on lower time frames. We don't trade the daily chart. I personally trade the 15-minute and the 1 minute. mark everything out. But for daily correlations, a lot of times, for time frame alignment, you want to have, if it's a daily level, you want to see a 1 hour change in the state of delivery, and then trade the 5-minute chart from that point on. Good. I'm glad, Jay Baller. I'm glad it helped, man. I'm glad it helped.
Thanks, Jimmy. You really helped. I was really wondering, for this SMT thing, because I have seen a lot of people be really good with it and profitable with it, and I was really wanting to know. It was a bit confusing, but you just explained everything for us. Thanks.
Good. Yeah, no problem. Viking, I do have some more videos. Yeah, I definitely need to spend some time making some more. But I'll put this in the education channel. And then, if you guys have a request for a class, like what you want to see, just put it in chat, man. We'll do one maybe this weekend or something.